Hello everyone. This is the pre-market report video for today, 21st August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. In the last pre-market video, we discussed about the RBI's monthly bulletin, and in that they mentioned though the economy was doing great, but there are some warnings and negative about Indian banks, which according to me it's true, it's a serious concern, and I presume most investors know that already. On the contrary to that, yesterday in the first half session, Indian banks led the rally, but in the second half, near half of that was sold into, and at the end of the day, still Bank Nifty outperformed Nifty. Here, before going into our regular stuff, I want to tell this. See, Indian market is in a very weird situation. If required, please pause and have a look. This is the last 1 year Nifty's price action and PE ratio. Here, the blue curve is Nifty value and the pink curve is PE ratio. Please ignore the blue curve and concentrate just on the pink curve. In the last 1 year, even I think for 2 years also, Nifty always traded in the band between 20.5 to 23.5 and the present value is 23, which is in the upper band. On the contrary, Bank Nifty PE ratio is near the historic 10-year low below 15, exactly 14.7. Hence, fundamentally at present, Nifty is trading at higher valuation and Bank Nifty is trading lower valuation. So, is Bank Nifty cheaper? It's very difficult to say. See, there is a sector PE ratio band as well. Private banks PE ratio should be between 15 to 19, whereas the public sector bank PE ratio should be in the range of 7 to 11. Here, overall Bank Nifty PE ratio is lower. However, if you see the index heavyweight, HDFC Bank and ICICI Bank PE ratio, both of them were around 18.5, which is again in line with the upper band range of the private bank. ICICI Bank and HDFC Bank together 60% weightage in Bank Nifty index. So Bank Nifty index is cheaper because of other index stocks like IndusInd Bank, Axis Bank and SBI, which trades around 10 to 13. Considering the whole Bank Nifty as cheaper will make the HDFC Bank and ICICI Bank to increase and expensive, which in turn increases the Nifty. Hence, basically, market cannot able to decide on Bank Nifty whether it's cheaper or not cheaper. Having a fix or solution around this lack of deposit growth will not favor the present PE ratio, but it will favor the future forward PE ratio estimation. That clarity possibly we will have in the middle of October. Until that time, market will have this confusion. But again, the November US presidential election that possibly will shoot up the US VIX, which in turn possibly will increase the India VIX as well. Again, repeating in short, Nifty trades near the upper range, whereas Bank Nifty trades at the lower range. But the top two Bank Nifty heavyweight stocks, ICICI and HDFC Bank, both trades at the higher band range. Here, please note, I'm not saying Nifty or Bank Nifty will decrease or increase. I'm just giving the underlying fundamental facts. Market never trade based on the fundamentals. It trades based on the momentum, but in the long run, it will fall back onto the fundamentals. But for the short term, it's just pure momentum, financial behavior, demand and supply, all those will determine the value. Hope everyone able to follow me. So I always, whenever I'm entering the trade, I weigh those facts and will take the option trade positions accordingly. Anyway, back to regular stuff about US market. Tonight, last FOMC meeting minutes data is scheduled to release, and as we discussed on Monday pre-market, coming Friday, US Fed chairman is going to deliver the speech in Jackson Hole Symposium. So US market is eagerly looking forward to it and expecting some clue about rate cut in September month, either 50 basis point or 25 basis point rate cut. Hence, last night US market was just a waiting game. In the end, Dow Jones decreased 0.15%, S&P 500 down by 0.2% and Nasdaq decreased 0.35%. In case of US VIX, it increased 8.5% and moved near 16 from below 15. Regarding oil, it haven't changed much. At the time of this video, WTI crude trading at $73 per barrel and Brent crude traded at $77 per barrel. Coming to Indian ADR, both the IT stocks again closed mild positive, but despite closing positive in Indian market, both the banks closed mild negative. So overall, IT is mild positive and banking is mild negative. Then in case of GIFT Nifty at 3 am Indian Standard Time, it dropped slightly and closed at 24,690, which means it's kind of indicating around 20 to 30 points gap down opening. So that's what happened in the global market yesterday. Now let's move to the India specific. First of all, yesterday S&P Global raised the outlook of Tata group of companies. Tata Motors maintained the same BBB investment grade, but they increased the stance to neutral from watch positive. Whereas Tata Steel and Tata Power, both rating was upgraded to BBB. So we can expect the whole group will be on focus today. Second, TRAA released the subscription report for June month. As usual, Jio added 19 lakh new customers, Airtel added 12.5 lakh new customers, whereas on the other hand, Vodafone Idea lost 8 lakh customers. Hence, we can expect the whole telecom group will be on focus as well. As a summary, US market closed mild negative, Indian areas closed mixed, and in line with that, GIFT Nifty indicating the gap down opening of 20 to 30 points. Moving on, as per stock open interest, UBL, Airtel, PVR Inox, Cipla, Ramco Cement and Jindal Steel and Bata India got an increase in open interest along with a negative close indicates the short build-up. On the other hand, ICC Prudential, National Aluminium, Trend, Biocon, Nowcree, HCL and City Union Bank got an increase in open interest with a positive price close indicating the long build-up. Regarding the things to look out, during the market hours, there is nothing that I'm aware of is shelf release that can influence the market. Whereas in the night for US, crude oil inventories, 20-year bond auction and FOMC meeting minutes release are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 90 points gap up and extended its positive move, but still it closed below 24,700. Thus on the daily chart, Nifty formed a bullish candlestick pattern with minor upper and lower shadow along with a positive bias in RSI momentum indicator. Additionally, Nifty maintained higher high and higher low formation for the third consecutive session and sustained above the upward sloping resistance trend line and also all key moving averages, which all indicating the continuation of positive. Hence, as long as Nifty stays above 24,600 to 24,650 range, the trend is likely to remain strong, whereas a decisive fall below 24,600 might trigger a reversal of the current uptrend. On the higher end, the resistance is at 24,840 to 24,860 zone. In case of Bank Nifty, it opened 110 points gap up and closed around 50,800 level. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with a minor upper shadow. Then similar to Nifty, Bank Nifty also maintained higher high higher low formation for the third consecutive session and positive bias in the RSI momentum indicator, and here also it climbed above all key moving averages. Hence, as long as Bank Nifty sustains above 50,500, it might bounce towards 51,000, then 51,250 level, while 50,000 mark is the strong support. Breaking that will intensify the sell-off. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 25,500 and 24,700, with new call option writing at 24,700 strike, followed by 24,900 and 25,500. On the put side, the maximum open interest was at 24,300 strike, followed by 24,500 and 24,000, with maximum new put option writing at 24,300 strike, followed by 24,700 and 24,600. Thus, from options data, 24,700 to 24,900 zone is resistance on the higher side, while 24,300 is the support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.